G'day everyone, welcome back to Pete's Investing. It's August the 22nd, 2023. This is the nat gas price update. You can see here the natural gas price has been fluctuating in this support resistance range between 2065 and 3050, and it's been bouncing in there for a number of months now. We have drawn a bullish divergence on the CCI, and the CCI is still increasing versus a slightly bearish divergence there on the price. Now for that to and we've drawn a target area here, which happens to be the around a 38% level of the Fibonacci range between that recent high. So the CCI is still heading in a more upward direction, but the price needs to break above this resistance, and also then our short-term target will be to hit this target area if it continues in a bullish momentum. For the divergence to fail, we need to see the CCI drop below this entry point, below that level there. You'll notice also the Stochastic. Let me just expand that. The Stochastic has reached this bottom here, very much oversold, but ever so slightly turning up and above its moving average. So it's a slightly positive move on the Stochastic. But again, we need to see it break much closer to this midpoint to be more bullish as well. That's on the daily. Now on the hourly, we did have a, it did actually retrace. You can see it if I zoom out. That's the wider support resistance zone we're talking about. It has actually had a few divergence which were hit in the past. You can see these little blue squares. They're all the divergence. That was a bearish divergence which it hit back there. There was another bullish divergence here. It hit that little target there. Another little target there was hit, and so on. Bearish divergence hit there. Bearish divergence there. And currently we're sitting at this 61% between this Fibonacci range. Now that 61% is key, because if it breaks much lower than that, we're going to see further declines. And it's not looking too positive, to be honest, because looking at the CCI, it's sort of falling off, and likewise the Stochastic is also declining. So we may see further declines from this point, but that is a key area for a bounce. And then obviously we need to see a break above that resistance area to be more bullish. Otherwise, if it continues much lower and actually breaks below the 78%, then it's going to be probably closer to approaching this descending diagonal trend line. So at the moment, looking sort of, it's still stuck in that range on the daily, on that support resistance area. So to understand how to trade some of the divergence strategies, but also trend trading strategies, subscribe to our Patreon page and support us more there, where we also look at weekly scans of stocks, currencies and commodities. Thanks for watching, and see you in a future video.